Assalamu alaikum everybody, welcome back to the channel. This is Invest Academy. I'm going to share with you today three halal stocks that I have bought myself over the last 9 months. I've been buying them heavily, and inshallah I want to share with you today these three companies, what they do. They'll give you a little bit information about their financials. But if you like, if you would like another video about going, diving into a bit more details about these companies, please let me know. Leave a comment below, and then I will inshallah look into that. Okay, so the first company that we're going to look at in today is a company called PepsiCo. PepsiCo is the company that sells Pepsi. Not only Pepsi, they do also sell other products, including Walkers, which basically is Lay's in other countries, Mirinda, and other products. So if you would like more information, just have a look at their website. They've sell plenty of different products. Now, one thing I love about this company is how well diversified they are. By selling this type of products and wide range of products, you can see if something happens to one of these products is not selling well, then obviously they don't, they're not going to suffer as a company. They still have revenue coming from other side of their products. Now, currently it's trading at $146 per share. This year is up about 8%, and their market cap is about $200 billion. At the moment, they pay dividend, which is about almost 3%, which is excellent to see, and their PE ratio is slightly high, about basically 26. Now, 26 slightly high, probably 20 and lower than 20 is basically what the analysts are saying is basically good PE ratio. Now, like I was saying in the last video about Apple, for example, this is another company that's completely opposite to Apple, because if you look at Apple, it's been up almost like 81% since the beginning of this year, whereas this company is only up by 8%. Now, these companies are well-established companies, the companies that do not basically innovate every single month, and they don't come up with the brand new shiny iPhones and so on. And because of that, their growth is not as basically rapid as the technology companies. Okay, so the dividend at the moment, like I was saying earlier, is almost 3%. This is how much you will get per share. Okay, for almost the annual payout will be about $4 basically dollars per share. Payout ratio is about 74%. That's slightly high, but obviously the dividend pay is actually quite safe, and I'll show you that in a second. So they've been growing their dividend about 8% over the last 5 years, and dividend growth of basically they've been growing their dividend over the last 48 years, which is excellent to see as well. And if you look at this graph here, you can see it for yourself. Since they started in 1990, it's been growing and growing and growing all the way to 2020, which is an excellent thing to see again. Now, like I said earlier, their dividend when it comes to dividend safety is 93% at the moment, which is excellent. So that means they're not going to run out of money to pay you, if you own one share, that $1 per quarter. Okay, so that's excellent again. Now, currently sales growth this year is about this December is about 5%. The next quarter is about 3%, because we're coming out of the lockdown. Maybe not a lot of people are buying. Okay, not a lot of people are buying, for example, so it will be about 3%. And then you got current year will probably be about 3%. Again, remember, these are estimates from the analysts that work for yahoo.com. Okay, and then you got next basically year, they're saying it will be about 5%, and that's that's basically what you expect from this sort of a company. Okay, now current price is $146. The analysts are saying it potentially will go up to 152 on average, which is excellent to see. And the majority of the analysts agree at the moment this is a buy, which is about 2.1, which is excellent to see. At least you can, if you put a little bit of money into that company right now, and inshallah if the markets stay the way they are, potentially it could go up to $52 per share. Okay, so that's PepsiCo. The next thing we're going to look at is Johnson & Johnson. This is one of the greatest pharmaceutical companies out there. I'm sure you've seen some of these products before, whether you've seen Johnson & Johnson or Carpal or Listerine, for example. All of these products are products that we use on a daily basis and obviously are in demand, and this is one of those companies that are selling this type of product everywhere around the world. Again, a worldwide company, not just based on the US or the UK. They're trading currently at $154 per share, up about 8% this year, market cap of $400 billion, and about 2.6 yield for their dividend, and currently trading, basically the PE ratio is about 20, which is really good, and then basically 20, which is excellent to see. Okay, now their dividend is about 2.6, you get about $4 per share. Okay, their payout ratio is about 50%, and then for the last 5 years basically they've been growing their dividend at a rate of 6% or more. And if you look at this part where it says dividend growth, can you imagine 58 years of growing their dividend? Absolutely brilliant to see that. And again, this is one of the reasons I invest in this company, because of their solid paying dividend as well as growth as well. Okay, and you can see this graph since in 1990 they've been growing their dividend massively. Now this is one of those companies where you get 99%. That's the highest score for dividend safety. So they are not cutting their dividend anytime soon, which is excellent to see, because if you remember, they about 50% of their basic income goes to, or their revenue, for example, goes out as a pay as a dividend. Okay, so 99 is very high, and that's excellent to see. In terms of sales growth, about 4% this year, about 5% I would say. Next quarter, about the same, and then 2020 overall, I'm not sure what's going on this one here, to be honest with you, but apparently is less than 1%, so that's very interesting. And then you get for the next year it will be about 8%. I don't think that's going to happen. Again, remember, these are basically analysts who work for Yahoo, and this information comes from them. So again, you have to do your due diligence and basically find out exactly, read basically the quarterly reports from each company to see exactly where the money is coming from. And again, that's something that I will be looking into in the next few weeks, maybe just a share video with you guys that basically show you how I actually read the financial statements of each company. Currently trading at 154, and basically the analysts are saying it could go up to 167. That would be brilliant. Okay, and it's a hold. Basically they've agreed at the moment it's a buy, sorry, not a hold. Okay, almost a 2 basically point, which is really good. Again, if you're buying it at the moment and it goes up to 167, again you're going to make a little bit more money on that, so that's excellent. That is company number 2. Number 3, we're going to look at a company called Home Depot. This is, if you are in the UK, this is the B&Q of basically the United States. Okay, we don't have them in the UK, but they are very similar. They sell all this type of products where basically if you need painting, if you're doing anything to do with your house, basically that's the place to go to. That's where the tradesman goes to, the plumbers, and everybody goes there to actually buy their products. Currently trading at $270 per share, up about 26% this year, market cap of almost $300 billion, and their dividend is about 2%. And their PE ratio is slightly higher than basically the 20 that I normally go for, but I know that will come down hopefully in the next few weeks and months to come. Okay, now they currently paying their dividend about over 2%, £6 per share that you own, 50% payout ratio, which is excellent to see. And then for the last 5 years, the growth rate for the dividend has been 23%. And they've been paying their dividend, growing their dividend over basically since, for the last basically 11 years, which is excellent to see. Again, when you look at the graph, you can see again similar sort of a thing, growing since 2007, which is absolutely brilliant. And their dividend safety comes at 87%, which is very high, and that's what you want to see from this type of company. Solid company, slightly expensive at the moment. I would say I wouldn't buy it right now at 100, $270 per share. But if you wait maybe a couple of weeks and months, hopefully you might be able to get it in maybe 250, which will be absolutely good entry point to that company. Okay, estimates sales revenue or sales growth, sorry, about 17% this quarter, basically in January, and then next quarter will be about 14, then 17, then about 2020, again less than 1%. Not sure what's going on there, but you just need to look at the financial reports that they produce, maybe the next 2-3 quarters, to kind of predict what's going to happen in 2022, inshallah. But currently it's a safe company. They every time basically the stock market goes up and down, it doesn't move. This is one of those companies that just moves a tiny bit. It's not like a risky investment, but it's slightly expensive, so I wouldn't buy it right now. Maybe just wait for a few months if you know what I mean. But again, basically the analysts are saying is about currently it's basically trading at 270, but the analysts are saying it's about $305. It could go up to $305 maybe in the next few months. At the moment they're saying it's a buy, which is very good. Okay, but if you get in right now, I would honestly, like I said, I would wait about maybe until it goes down to 250. If it goes down to 260, maybe it's that entry point, and then you can actually, with the dividend, obviously you're going to make a good money. But dollar average it, buy a little bit of this company every basically week, month, in the next few weeks and months, and inshallah you'll get very good dividend if you are looking to kind of get in. If you're dividend investor, this is one of the best to invest in. Alright, so that's the last video. Sorry, that's the last company. Have a wonderful time, everybody. I hope you staying safe with everything that's going on. I was watching the news today, and all I see is lockdowns everywhere, so please be safe. Inshallah, I will share with you another video. So the next video I'm going to do is ETFs. So I'm going to look at what ETFs are, how to invest basically in ETFs, and what is available to us in the UK, because I'm based in the United Kingdom, so I'm going to look at it from that perspective. But in America they do have a few more ETFs, then hopefully I will maybe talk about that in another video. Now, thank you very much for watching this video. Please share this video with your friends and family. My aim is not just to make money or anything like that. Obviously I would love that, but is to help other people who are going through similar sort of situations. Because if you think about it, when I started, I literally couldn't find basically a channel like this, and if I had someone doing this for me, alhamdulillah, I would definitely have to, it would have made my basic things a lot easier. So inshallah, that's my plan, to help you, to help myself and everybody else. Inshallah, I'm learning while I'm doing this as well, because I have to do the research. I have to go on. To be honest with you, everything I've done so far, all the companies that I've shared with you so far is companies that I've invested in myself. I've got over, I think each one of these companies, I think I've got like Home Depot, I think I've got about 5 shares, and then 10 shares for each of the Johnson & Johnson and PepsiCo. So inshallah, I'm going to share with my portfolio with you soon, inshallah, see how that goes. Please subscribe, share with your family, with the link, and also I'm going to put if you're based in England or even based in Europe, I'm going to share the Trading 212 basically link down below. Hopefully if you can click that, then you can get free share for yourself, and I'll get free share as well. Take care, everybody. Assalamu alaikum.